Welcome back, traders. It's the first trading session of September, and the week ahead is expected to be quite busy in terms of data releases. Particularly, the spotlight will be on the U.S. non-farm payrolls report, a report that could face credibility questions after President Trump fired the commissioner of the Bureau of Labor Statistics last month, following shocking negative revisions in previous releases. But that's not all. This calendar will also release the ADP private employment report, the JOLTS job openings, and the ISM business PMI figures. All could be quite important in terms of providing evidence on inflation and employment. Meanwhile, in the Eurozone, CPI inflation numbers could move the euro on Tuesday, while in the crypto space, Bitcoin has been trending to the downside lately, unable to gain some ground during the weekend, so Bitcoin could be another important market to watch. So this video I'm going to analyze euro dollar, dollar yen, and Bitcoin against the US dollar, and starting first with dollar yen. We can see that the pair has been quite stable recently, particularly over the past 3 weeks. It has been quite directionless, and probably this week's economic releases could provide some fresh volatility, as Fed Chairman Jay Powell seems to be shifting sides, seems to be adopting a more dovish tone. So if this week's non-farm payrolls report arrives surprisingly lower than expected, then that could add more pressure on the US dollar. Projections suggest an increase of 75,000 in new jobs. That's kind of very close to the previous reading of 73,000, but other parts of the report, such as the unemployment rate, could cause some concerns about the labor market. Particularly, the unemployment rate is expected to edge slightly higher to 4.3%, and wage growth could slow down. So overall, if that proves to be the case, the report could be could wave on the US dollar. So in this case, if the price falls below 146.65, I expect an extension towards the 145.15 level, while lower than that, the 143.35, the 144 number could be the next pivot point. From a technical perspective, the risk is still skewed to the downside. If you look at the technical indicators, they're still pointing to the downside. The RSI has been struggling to cross above 50, so that suggests a negative bias, particularly as the price seems to be struggling to gain momentum above the 200-day moving average at 147.85. Now, in the event of a positive surprise, and if the ISM business PMI figure suggests that inflation is in control and employment is still healthy, then that could boost the US dollar towards the 149.15 level, and then probably additional increases could take us up to the 151.60 resistance zone. Now, looking at euro dollar and Eurozone's inflation numbers, well, the data are expected to the headline inflation could stay steady around 2%. The core measure could also is slightly lower to 2.2%. That's very close to the ECB's target, so that could be a sign of progress. But the ECB has already hinted that rate cuts could be data dependent in the coming months, so probably the central bank seems to be pausing its rate cut cycle for the time being. Therefore, even a negative surprise in the numbers may not boost the case for a rate cut, but probably volatility in the US dollar could be a bigger market mover in this market. So further dollar weakness could help euro dollar to surpass the 1.1728 resistance territory, which includes this resistance trend line over here. Successful penetration higher could take us towards the 3.5-year high of 1.1828 reached back in June. And then beyond that, the rally could stretch towards the 1.1980 level, or even higher to 1.2045 or 1.2075 zone. But don't forget that we have a new political turmoil in France. The government will face a no confidence vote next Monday, so probably political jitters will keep waving on the euro. But for the time being, the dollar weakness seems to be a great bullish catalyst for the euro dollar. Now, in case the US dollar gains more strength, the pair could reverse lower, and a break below 1.1590 or 1.1650 could send bearish signals to the market, could trigger selling pressures towards the 1.1345 and 1.14 territory. While below that, I would keep a close eye on the 200-day moving average and the 1.12 region. And finally, looking at Bitcoin, well, Bitcoin couldn't gain much ground during the weekend. As we can see, it keeps struggling below the 110,000. It found support around 107,650. That has been a key pivot point back in July. The price managed to stage a nice rebound around this territory. So it will be quite interesting to see whether a similar action will take place in the coming days. Well, if we look at the technical indicators, we do have oversold signals coming from the RSI and the stochastic oscillator, so I wouldn't rule out a rebound. However, for that to happen, I would like to see clear close above this resistance line. Currently seen around the 110,300 level. If we surpass this territory, then the next stop could be somewhere between 113,778 and 115,900. This is where the 20 and 50-day moving averages are located. While above that, the focus will turn to this broken support trend line near 120,585, and the 123,000 mark could be also important to watch, because that's where the price couldn't successfully overcome this level back in July and also in August. So, yeah, and of course, if we look at other crypto markets, Ethereum seems to be facing a bigger swing. So probably traders are shifting their attention to more volatile crypto markets. And given the political turmoil in the US, probably investors feel some uncertainty about Bitcoin. But let's see, so far the big picture is positive, and this downward move, although it could gain more legs, so a short recovery could be also possible. So that's everything I want to share with you guys. I hope you liked my analysis. If you did, please subscribe to this channel and like my video. I will be back soon with more technical updates. So thank you for watching, and see you next time. Bye bye for now.